Hello, everybody. Welcome to today's Trend Signal podcast. It's the 20th of July, 2020, and this is the How to Trade Forex and Stock Markets podcast, where we do a bit of a review of really what's going on at the moment in the news, the fundamentals, the economics out there, and really what we should be looking at to help us with our trading decisions. And as ever, I'm joined with our chief analyst, Jerry Miller. Hello, Jerry.
Hello, hi there.
And Jerry will obviously make sense of it all, as he always does. This is Adrian Boothie here. I'm the head of trading here at Trend Signal. And today what we're going to be talking about is really the euro rising, stocks rising amid, what was, until a short while ago, a bit of a Eurozone stalemate. But it seems there might be a little bit of light coming through. But Jerry, why don't you tell us a little bit about what's going on with the Eurozone and the rescue fund and all of that stuff?
Yeah, okay. Well, first thing this morning, i.e. early Monday morning, stocks were in a bit of a retreat. Far East markets and European markets were on a bit of the back foot, and it's really following the lack of any deal in the Eurozone regarding this 750 billion rescue fund. This summit, gosh, when did this start? 4 days. So it started on Friday, Saturday it was scheduled, and it went into Sunday. Then they pushed it into Monday as well. I think there's a certain amount of reluctance of the people attending to reschedule another summit in August. So they've just been knuckling down, trying to get on with it. And I think that this time last week we were talking about it, and you questioned me, Adrian, on who the frugal northern states were. And I came up with Netherlands. I think I mentioned Sweden, but I didn't know the other two, and I foolishly suggested it was France. But all the Frenchmen probably thinking I'm mad. No, the frugal four, they're people, we love giving people descriptions. So the frugal four are Sweden and Denmark, Netherlands, but Denmark and Austria, the other two, Adrian. So they're the four. And they are sort of pretty unhappy about the way that the money is being granted or given away, because when money is given away, it's not really deployed in the same careful manner as money that's loaned. And I think the major concern as well is that the frugal northern states, the ones I've just mentioned, are going to pay more into the fund, a lot more into the fund than they're going to receive any benefit. But that's what happens when you join the Eurozone. It's the collective now. But this sets a precedent, Adrian, as I was mentioning to you earlier. This is what's happened and can happen again. And I think that's one of the reasons why the Dutch and the Swedes were particularly keen to make sure that it wasn't, 750 billion giveaway is quite a chunk of money, and most of it's going to Southern Europe.
Yeah, and of course, being a grant rather than a loan, it has certain connotations perhaps about how it's going to be spent. You'd certainly be a lot more careful and manage probably a loan better because it's got to be repaid than a grant, wouldn't you? And I think that's part of their main problem, isn't it?
Yeah, and as I said, it does set the precedent, but the northern states seem to have been absolutely committed to ensuring that this issue is dealt with properly now and in the future, because as I said, it sets a precedent. And needless to say that the southern states, the likes of Italy and Spain, are totally opposed to the watering down of the original deal. And I think that was the original proposal. That was Merkel along with, Macron, a couple of others. Was it back in late March, early April? Anyway, I think the lack of deal was sort of hampering the stock markets earlier on, but I believe that they managed to get a deal in the last sort of couple of hours. The EU hardliners, there's another name for them, the frugal northern states, the frugal four, the hardcore, they apparently are ready to accept it is a watered down deal. So Italy and Spain said they weren't going to accept a watered down deal. Well, they've had to accept a watered down deal, and the frugal four have to accept that they're now proposing 390 billion in grants instead of the 750. So there's a compromise from the frugal four, and there's a compromise from the likes of Italy, Spain, Portugal, and Greece. So it's not signed and sealed yet, but that's why the markets are reacting the way they are.
Yeah, because and it's interesting to say that. Bring it back to the markets. The equity markets were down this morning. If I look at the DAX chart, I know this is a daily chart, but you can the pin down to its lows. I mean, we've rallied nearly 200 points off the lows now on the DAX since I guess when that announcement came out. So it's quite some rally off those lows there. Looking like a pretty strong candlestick right now, really. And
Yeah,
actually, following on nicely from last week, Jerry, as well, which was a pretty strong week for equities, wasn't it?
yeah, that's right. Yeah, I mean, I think that the market had a wobble around the opening at 8 o'clock, and the market sort of piled off. The DAX was sort of trading around 12,920, 12,930, something like that. They went down to, well, the lows, they hit 12,800, but they're down since then. So it's positive, and it looks like the deal has been agreed in principle. Obviously, they're going to have to wait for the fine print and people signing off on it. But I think they're going to want to put this one to bed as soon as they can. Yeah, markets last week, they did really well. Yeah. FTSE, Dow, S&P, DAX, Nikkei, all the major stock markets were higher. Seems they've sort of moved another notch higher, Adrian, on the back of some pretty positive news, really.
Yeah.
I mean, we all thought perhaps...
Look at the DAX, the S&Ps was back up, just slightly took out those highs from early June, didn't it, on the S&Ps? They're holding off there at the moment, but yeah, very, very strong. You can't seem to stop it, can you, at the moment? But maybe Tesla's results will do something about that this week. Who knows?
Oh, God, yeah, weird. Well, and a lot more besides. But talking with the Q2 earnings in the States, we were all thinking, I wonder if it's going to justify recent prices, etc., etc. But the market took it in its stride. There was something like a quarter of all S&P 500 companies have given up on guidance because they just hadn't got a clue, being forced into this lockdown. And so there was a little bit of sort of, well, where is it going to come in? And I think on balance, the results have not been worse than expected. And they tend to downplay those expectations. But look at the stock market. You've got the chart up there now. I mean, we're not a million miles away from the highs we were at pre the pandemic. So
we talked about multiples in previous weeks, and multiples of earnings. And, they've talked about there being broadly about a 45 or 47% cut in profits for this quarter. And it will make it the worst quarter since 2008, if that's the case for stocks. And yet, look at where the share price is.
But of course, they're seeing past that now, Adrian, as we discussed in previous weeks. So investors, the prices are now predicting a V-shaped recovery. They're predicting a rebounding growth, something that is not going to be across all sectors. As we know, the top 5 tech companies make up 20% of the S&P 500. It's extraordinary. And the likes of Amazon have increased in value by more than the top 10 companies in the FTSE 100 are worth in combination. So it's just an extraordinary tale of extraordinary gains that, as I said, don't confuse the stock market with the economy. Stock market is a stock market. It is looking at circumstances that may come to pass in the next 12, 15 months forward. So to look at the poor record of the White House and coping with the corona pandemic, problems with the Black Lives Matters protests, the problems with the polls, they're seeing through this. Plus the fact that we know, Adrian, there's nowhere else to put your money. You're not going to lock it into a bond and not get any money back. That just doesn't happen.
Pay money out on it.
Correct.
It makes it difficult. And actually, but there's still continues to be some great moves on the markets at the moment. And one of the things I did want to just quickly bring up before we move on to the other information on currencies movements last week, we are actually running a few events this week, which you listeners might be interested in coming along to, where we're going to be teaching one of our trading strategies, going through the live markets, current opportunities, talking about stop losses, targets, how we're identifying these trades in these markets, looking at foreign exchange, indices, commodities. And if you'd like to come along and attend one of these live events, then you go to our short website link, and if you're watching this on YouTube, you should be able to read that yourself. But otherwise, it's bit.ly, so bit.ly/learnts. So bit.ly www.commodities.com/learnts. If you go to that webpage, register for a free live trading session, and we'll teach you one of our favorite strategies, which can help you take on some of these markets. Because there's been some decent moves, hasn't there, Jerry? And you look at some of the, like I said, the indices, they're up sort of around 2 or 3%, and some of that being from some of the data. So China was some good data, wasn't it, last week, Jerry?
Yeah, we had, it's a sort of backward-looking number when they tell us how an economy had performed. So that Chinese quarterly GDP data came in a lot better than consensus, and that sort of set the tone, although I understand that Chinese retail sales weren't much to talk about. But generally, remember, China went in lockdown really early on in February and came out of it in late April or early May, and has really been back onto full sort of bore really, and it's done particularly well. So look at that prediction of 2.2 came out at 3.2. People always question the Chinese state, because it either tends to match or beat its expectations. So it doesn't like to criticize itself, if you know what I mean, Adrian. But it wasn't just GDP in China. We also had those retail sales in the US on Thursday at 7.5% instead of 5%. The core retail sales 7.3% instead of 5%. So smashing consensus forecast, and the manufacturing data as well. A lot better than expected. The Philly Fed, that's the Philadelphia region. It's one of the key federal districts where they measure these manufacturing indices, and at 24.1, another sign that things are really recovering. And you have this sort of issue now where we're looking at the coronavirus spread and the size of the infections now. I mean, and Anthony Fauci, he said it's going to grow from 27,000, it could go to 100,000 if we don't change policy. Well, it's hit 72,000, there's 66,000 deaths reported on Sunday. It tends to be less over the weekend. They'll probably carry on rising, and it may well come to pass that the infection rate is 100,000 a day, and yet they're not locking down. They're locking down in California, that's got twice the population and about a quarter of the number of the infections that Florida have, but Florida, for some reason, doesn't want to hear of it. They've hardly locked down much at all. I mean, they've locked down bars and a few restaurants, but not all of these big social gatherings and stuff, and it's just weird. But there we go.
I just wonder how different things would be if it wasn't a presidential election year. It seems strangely political.
And also, if the governor was a Democrat, not a Republican.
Yeah.
But exactly. There you go. But for all those old people who retired to Florida, wow, what a great place to be living at the moment. It's not sort of. Yeah,
it's not where you want to be as an age.
Well, I think I'd definitely be getting home deliveries. I wouldn't be venturing out, that's for sure.
Yeah. Okay, so we've got 1 or 2 minutes left, Jerry. So just quickly whiz us through so the euro, slightly positive, about 1% up last week.
Well, currency is still marching higher against the dollar, or dollar giving up more ground. And this is something that has been brewing for a while. What we've got to remember is back in March, in reaction to the pandemic, the Federal Reserve, the US Central Bank, they really slashed interest rates to near zero. And this, I think, has been a key driver in the dollar's weakness, really. Because there's very little daylight now between the interest rates of, for example, the Eurozone, the UK, Japan, and the US now. So you're not getting any sort of carry by holding dollars. And so that's removed that sort of key argument, really. So
that's a good point, because they were some way ahead of everywhere else, weren't they, really?
Yeah.
I say in relative terms, maybe only 1% or, in a bit, but, quite a lot more interesting holding dollars than it was holding other currencies, that's for sure.
Enough to make a big difference. And there have been, there's an article in the FT that basically focused on the fact that this came out about a week ago, but that the conditions are not supportive of the dollar now. You've got a badly managed pandemic response to the pandemic in the US. Trump has made a real hash of dealing with the Black Lives Matter protests, and his poll ratings are not good. And anyone knows that if Trump doesn't get in, Republican, a Democrat, Joe Biden, gets in, stock markets don't react well to Democrats generally. So I think that is something that the markets might want to start pricing in at some stage, but certainly that's been reflected in the dollar weakness. And what is it? How many is that? Is that 10, 12 business days we've had of dollar weakness or euro strength, and more today? Look at it, just touched on a new high since that March.
Yeah,
March
probably the
time.
biggest moving currency, the euro, wasn't it, last week? Some
Yeah.
very big movement there.
Yeah. We were up a 1.25 cents, which is about 1.1%. It's a big move. It is definitely a big move, and I think, as I said, I think the fundamentals are stacking against the dollar at the moment.
Okay, and just very quickly, the commodities. I mean, oil not really doing a whole heap. It's in a very, very tight range. Not really worth looking at, to be honest. I think we need to see a bit of sort of a breakout either way, and then start to get on the next move after it starts to wake up a little bit to become more interesting. Gold, on the other hand, seems to be hugging that sort of 1810 area. It's been doing it for about 2 weeks now. Can't seem to break through it. I think we can see that good break above 1810. We'll see a little bit of life on it, particularly if we start to react negatively to some of the earnings data that might come out. But we're going to talk about that in the next podcast video, because we've got quite a few events coming up for the week ahead. So anything else to finish us off with, Jerry? Just
no, just in relation to gold, you mentioned that it is hitting a brick wall at the moment at 1810. Gold is sort of defying some of the normal logic. It is a risk haven, sort of place to park your money, and you might expect it to fall back as the stock market continues to rally. But I think the bulls are definitely in control. We've discussed it every week for the last month and a half, and I think the sliding US dollar is only making this precious metal even more attractive for now. I'm not a massive fan, but you're now in sort of clear air, as we call it, and a break above 1810 could easily unlock 1900. I suspect.
Yeah. Good. Okay. Well, that's pretty much it from us this week, everybody. As I said, if you want to tune in for one of our live events, then please come along, register. You can go to our website and visit bit.ly, so bit.ly/learnts, and you can register for a free place at one of our live trading webinar events. Otherwise, please tune in to our podcast where we talk about what's coming up for the week ahead as well. And so have a look out for that one, also on our podcast channel. But otherwise, have a great week's trading, everybody, and we'll see you next time. Bye-bye for now.